This is Matthew Cratter from Bitcoin University. Today I want to talk a little bit more about petrodollars, Bitcoin, and the Fed. And if you didn't see yesterday's video, you should probably watch it first, since today is a follow-up to this video about the death of the petrodollar. So the petrodollar system, just to catch everyone up, is this global consensus that all crude oil and basically all physical commodities and the global trade of them were to be bought and sold using only US dollars. This was a globally imposed consensus instigated in 1974 by the US with the cooperation of the Saudis and adopted by most of the world for the past 50 years. And people like Saddam Hussein and Muammar Gaddafi, who violated the consensus and tried to sell oil, for example, for euros or gold, were made very public examples of. Now, it made a lot of sense to use US dollar for oil trade since the gold-backed US dollar had already been the world's reserve currency since the Bretton Woods Agreement following the end of World War II, and the US dollar was really the main currency being used for global trade at the time. So why not use it for the master commodity, which is crude oil, even or especially after the US abandoned the gold standard in 1971? It really made a lot of sense since there really wasn't another alternative in terms of currencies. Gold had just been rejected by the US and others as the great fiat experiment began, with Nixon closing the gold convertibility window in 1971. What other currencies were available to be a global reserve currency or global trade currency? USSR and other countries behind the Iron Curtain. No one was using rubles. China was really still a peasant backwater at that time. And Europe and Japan were still recovering from World War II and couldn't rival US geopolitical or economic power. So you really had only one choice, which was US dollars once the gold standard was rejected. And the point of yesterday's video about the death of the petrodollar was not that there was a piece of paper signed by the US and Saudis with an expiration date that just came due, though the agreement was worked out approximately 50 years ago in July of 1974, but rather that this consensus, it wasn't necessarily a paper agreement, or if it was, I've never seen the document, but it was definitely a consensus, and this consensus has been fracturing over the past decade, and it's accelerated over recent years largely due to Western sanctions against Russia. That's not to say anything about either side in the war there, but it is a fact that Russia can still stockpile US dollar paper bills if it wants to, but Russia has been cut off from the global US dollar banking system, so it cannot accept digital dollars for oil. There's really no place for it to store it, as far as I can tell. And this has led to a fracturing of the petrodollar consensus, as countries like China, Russia, and even India now have started using currencies other than the US dollar to buy and sell crude oil. India has paid for Russian crude in rupees, dirhams, and Chinese yuan. In case you're wondering, the dirham is the official currency of the UAE. So I think a good summary is that this is a consensus that's ending in the sense that oil trade between China and Russia is already being conducted using yuan rather than US dollars, which is the global standard for 50 years. China and Saudi Arabia setting up large currency swap agreements is good evidence that Saudis are already selling at least some oil for yuan to China, but don't want to disclose it publicly. This is the currency swap here that I am alluding to, and this was a $7 billion swap, currency swap agreement that was set up to swap between Chinese yuan and Saudi reals. We also have this article, which I'll link to in the description notes below, about how the yuan's being used more frequently now in the Gulf states. And this was especially interesting from the beginning of this year, that China's largest oil supplier in 2023 was Russia, and there was nothing that the US and its allies could do to stop this, and they're obviously not using US dollars for this. So my main point in yesterday's video was not that the US dollar is going to disappear overnight, because it's not, thanks to strong network effects like continued commodity trade in US dollars and the recycling of East Asian trade surpluses into US dollar assets by China, by Japan, increasingly less by China, but still by Japan. So my main point was that many large holders of US dollars and many large marginal buyers of US Treasuries, US government bonds, have been moving away to other things like yuan, rupees, gold, and physical infrastructure. And we talked about China's Belt and Road Initiative yesterday, where instead of recycling their trade surpluses into US Treasuries and US stocks, they've increasingly chosen to invest it in Africa, in South America, and thus to exert their economic and geopolitical influence. Now, why is this important that many large holders of US dollars and many large marginal buyers of US Treasuries have been moving away? It's important because if China buys fewer Treasuries, someone needs to pick up the slack, because we all know that the US government is not issuing fewer Treasuries, but rather more, as the deficit spending continues out of control, and they need to make up the difference between tax revenue and expenses, and they do this by issuing debt. Someone has to buy and hold that debt. So if China buys fewer Treasuries, someone needs to pick up the slack. Someone needs to buy that US Treasury toxic waste sludge, which could be a wealthy boomer in the US who is tempted by a 4.25% yield on a US Treasury without understanding that the real inflation rate is much higher. So by investing in Treasuries, he's guaranteed to lose purchasing power year after year. And maybe that's better and more relaxing than the volatility of holding stocks in retirement. So it's not meant as a criticism, but basically someone has to buy those toxic Treasuries. And if it's not China, if it's not a boomer in the US or someone else in the US or a private citizen or a bank somewhere, then it's probably going to be the Fed, who must print new US dollars to buy it and thus make the US dollar lose even more purchasing power. So the unraveling of the petrodollar consensus, combined with the unraveling of the China recycling trade surpluses into US Treasuries consensus, which we talked about in more detail in yesterday's video, all of this means more Fed money printing, more inflation, and much, much higher Bitcoin prices. There are a couple questions as well about yesterday's video. One from Paul: love your content, but at a certain point in the video, I think it's a bit of a leap to infer that a transition away from the petrodollar standard somehow implies a transition to the Bitcoin standard. That may be wishful thinking. The US will never abandon fiat regardless of how much it inflates. US citizens will always have to pay taxes in US dollars, and so any Bitcoin holdings, as valuable as they may be, will always have to be converted back in order to pay taxes. And my response to that: the US will never abandon the US dollar, but more and more countries and people will be unwilling to accept or hodl US dollars. A US dollar that is used only internally for tax payments is no longer a global reserve currency. That leads to the question of what will replace the US dollar as a global reserve currency. Not gold, not yuan, since China has a closed capital account and no one trusts China. Not rubles, obviously. Bitcoin is the most likely solution for this. And then Paul responded, but if that happens, the US will become more hostile to citizens holding BTC, as you've said time and time again. You said the other day that ETF holders aren't going to make it. Why not? Assuming one is and wishes to remain a law-abiding US citizen, if Bitcoin does replace US dollar as a global reserve currency, thereby mooning the price, and the US government imposes stricter laws around holding it, how is holding KYC Bitcoin in cold storage going to be any better for you than, say, holding ETFs if you're still required to convert back to US dollars? If BTC moons, so will the ETF in the currency that matters again for law-abiding US citizens. I've posed this question in the past and still don't feel like I understand the answer. I understand the brain wallet, flee my hyperinflating third world country scenario, but for law-abiding US citizens who will not just pack up their families and flee the US because of Bitcoin laws, KYC Bitcoin, it seems, is useless to them if there are laws enacted around moving it. I almost feel like if one were to take the entirety of the message you've been sharing over the past few years to heart, that the only Bitcoin they should buy in self-custody is non-KYC. And even then, if you are audited and own all kinds of property that you didn't buy with the US dollar, you may still be screwed. I think this was a great comment, a very good question. My short answer to it is this. The scenario that I'm talking about here is BTC being used globally to settle trade surpluses and trade deficits between countries. In other words, a global medium of exchange used for trade, just as the US dollar is now, and as a global reserve asset or settlement asset for countries, for banks, for corporations, and for people and their families. Just because the US won't accept Bitcoin as payment for taxes doesn't necessarily imply that BTC would be criminalized for citizens. Even today, people store their savings, for example, in big tech stocks, and then sell off shares as needed for living expenses and taxes. One could imagine Bitcoiners doing the same, and many already live this way today. In a scenario where Bitcoin is criminalized by the US government, you would be unable to leave the country with your Bitcoin ETF, but you could certainly leave with your real BTC. Or you could remain and use BTC in a small local peer-to-peer economy. The US is obviously a big place geographically and impossible to completely lock down or control. This peer-to-peer use would be impossible with Bitcoin IOUs stuck in your brokerage account. In other words, you cannot use it in a peer-to-peer manner if it's a Bitcoin ETF. And then I have this little mathematical equation here. Non-KYC Bitcoin is better than KYC Bitcoin, which itself is better than instruments like spot Bitcoin ETFs that allow you to profit from the dollar falling against BTC, but which do not give you the sovereign powers of self-custody and censorship-resistant peer-to-peer payments. So that's some of my thoughts around this issue. Obviously, no one knows what the future will hold. No one knows which path the U.S. will take in its approach to Bitcoin, though it has been very encouraging and very positive in the past couple of months. Tomorrow, Saturday, June 15th at 11 a.m. Mountain Standard Time, I'm going to be offering another one of my live Zoom classes. This is available for members of Bitcoin University Premium, and we will be talking about this topic of non-KYC Bitcoin and related topics. Non-KYC Bitcoin is just Bitcoin purchased without having to give up your personal details. And there are basically two offerings here. There is the YouTube membership offering, which you can join by clicking the join button on any video, and then you can join at $2.99 per month or $4.99 per month. This gets you loyalty badges, custom emojis, and a couple extra members-only videos every month. But people have been asking the distinction between this and Bitcoin University Premium. Bitcoin University Premium is the paid classes, the paid course, the Bitcoin Forum, and the live classes that are offered over at bitcoinuniversity.com. And the Bitcoin Forum has especially been fun, I think, the last couple of weeks. This is the paid course, The Ultimate Guide to Bitcoin, and then there are the live classes as well. There's also some free resources on this website, which I encourage you to check out. These are YouTube videos which I've curated, and this is not a bad place to send a beginner who wants to learn more about Bitcoin. Some of these videos actually get pretty advanced as well. And so I'll put a link to all this in the description notes below. If you want to join the live Zoom classes tomorrow, you would need to become a member of Bitcoin University Premium. And I'll put all the relevant links in the description notes below. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.